Hello and good day. This is the daily analysis of U.S. oil and U.S. natural gas symbols for June 3rd. After a consolidation move within an ERC candle, the price collected the liquidity on the sell side with a pin bar candle and formed an RSI divergence. It is now moving upward and is likely to collect the liquidity on the buy side. It is anticipated that with increased momentum in the market, the price will enter the unicorn zone at the 63.61 level, and from this area, at the identifier level. Additionally, in the bullish trend, we can enter a sell position targeting the edge of the order block at the 60.8124 level. However, if there isn't enough momentum and only the liquidity on the buy side is collected, the price could enter a bearish phase from the 63-point level and continue its downward trend. With the analysis of the time frame, 1 hour for the USOIL symbol, we can see the price moving upward, where a CVD divergence has formed. There is also an RSI divergence here as confirmation, and after the liquidity is collected, on the sell side there was a reaction to the order block area, and it has entered a bullish phase, which could continue its movement up to the bearish order block area at the 63.3 and 63.8 levels. Also, by examining the Fibonacci ratio, the 50% level of the order block is close to the 50% Fibonacci level, which is considered a highly significant level and can act as a resistance zone, rejecting the price. By using the price manipulation leg and projection, we can analyze the potential target of the price movement, which is located between 2 and 2.5 in the order block area, considered at the 63.40 and 63.78 levels. If this zone is broken to the upside and the price reaches the 63.87 level, it can continue its trend. We can analyze its profit potential from this perspective. It can continue until it enters the BPR zone at the 64.79 level up to the 65.47 zone, which is the price manipulation leg from 4 to 4.5. This is the price, and after the 2 to 2.5 zone is targeted, the 4 to 4.5 zone can serve as the next price range. Also, if a reversal in the bullish trend is identified and the price returns, it may enter the pin bar zone.
If a lower low is formed,
a second trading strategy is formed, which we can use to enter a trade from this position. Set the stop loss behind the swing of the pin bar candle at the 60.95 level or at the 50% level of the order block at 60.72.1. Set the target with a risk-reward ratio of 1 to 1, 1 to 2, or based on another method. We can choose the price manipulation move at 63.40 up to the 63.78 range as our target. If the price doesn't have enough momentum, it can move up to the 1 FBG range, where the levels 62.12 and 61.86 are highly significant resistance zones. By analyzing the 15-minute time frame, this is the setup for US oil. We see the price moving downward. After a liquidity sweep, it has re-entered the range, which forms a swing failure pattern strategy. And if the price returns to the order block or FVG area, we can use this opportunity to enter a position, with the 1-hour order block area serving as our target. Also, the price is forming a flag pattern and has created a point towards the sell side. With the price moving downward, it can collect liquidity, and after that, enter a bullish phase. On the 4-hour time frame, it was predicted that the USD NATGAS symbol would continue its downward trend. This was accompanied by a bearish displacement, and after breaking the unicorn zone, it entered the next area, and it continues to move along with the downward trend. By examining the price action, we can see that the price has entered a high potential zone, which indicates the continuation of the trend. The market is bearish, and the price might have a short-term correction to the upside by entering the zone, after which I will need to update my analysis.
at the moment,
the price is forming liquidity towards the sell side. It's on the buy side, which could move downward, and after collecting liquidity at the 50% level of the fair value gap at level 4.099, the price could be rejected and move upward. However, if it is accompanied by bullish momentum, it could enter the unicorn zone. The midpoint, 50% of the unicorn zone, is at level 4.510. If the price gets rejected there and we identify weakness in the bullish trend, we can enter a sell position with a target of 4.024, where the price can collect liquidity on the sell side, and it can be considered as a liquidity grab level before entering an order block zone. By analyzing the 1-hour time frame of the NatGas UST pair, a CVD divergence has been identified along with a divergence in the RSI. In the RSI, higher lows are forming, while in the price, lower lows are being made. We can also see price compression, which, with the accumulation of NatGas liquidity on the sell side, could move upward and collect the buy-side liquidity. By using projection, we can analyze the potential zones for price movement. The 2 to 2.5 range at the 4.426 and 4.474 levels are considered our initial zones. If the price breaks through this range and closes above these levels, it can enter the next zone. That is, the 4 to 4.5 projection range at the 4.618 and 4.666 levels. On the 15-minute time frame, the NatGas USD symbol is in a consolidation phase. We can see that during the Asian session, the price had an accumulation move, and during the London session, there was a manipulation move within the Asian session, which continues as we move forward. It could be that in the New York session, there will be a distribution move accompanied by a musical rhythm. If it closes above the limited cancellation level at 4.313, it can continue its bullish trend. If it closes below the 4.137 level, it could enter a bearish phase. Wishing you success and profits.